Hello, it's Friday the 13th. Ooh, spooky. I'm FxPlew and this is the Market Brief. Now, Sarah Breeden's been on, the Bank of England Deputy Governor for Financial Stability, and she said it's reasonable to expect a quarter-point rate cut by April. She voted for a rate cut at the February meeting when Bailey tipped the balance 5-4 to hold, and she thinks the time is right to take the foot off the brake and help sluggish growth, as she sees downside risk from slow growth and rising unemployment as a greater priority than inflation. And she's fairly well supported by the data. Inflation may be rocking a casual 3.4%, but forecasts suggest that could be down around 2% by April. Meanwhile, Q4 GDP was fairly anemic at 0.1%, and the November data was revised down. The service sector is pretty flat, manufacturing is up but doesn't contribute nearly enough, and construction is in the worst place for 4 years. We really do need a rate cut. Over in the US, the labour market is back in focus after non-farm payrolls. 130,000 new jobs beat forecast, but revisions to 2025 data brought the total number of new jobs last year down to 180,000. That's an average of 15,000 a month, and I'm not sure we even had a bid that low in any of last year's sweepstakes. However, to shed a different light on that, it does mean that the US economy posted fairly remarkable growth with few, if any, new jobs. And that makes you think, doesn't it? In the market, the dollar index traded around and closed around the 97 mark yesterday, and we head towards the weekend from a kick-off of around 136 against the dollar, 114.75 against the euro, and euro dollar is around 118.50 on the open this morning. So that's it from me, capping off yet another week. Thank you very much for joining me yet again. We'll be back on Monday to do it all once more. Have a great weekend.
If you do not have a clue, then just tweet through and ask FxPlew.